Howdy neighbor, it's Rob here, the Golden Rule of Real Estate, here to start a new series of Golden Rules. This series will be tailored specifically for a person that is looking to start the home buying process. If you're a first-time home buyer, never bought a home before, this is the series for you. I'm going to break this up into a series of 6 or 7 different videos, so they're not too long to watch, all in a stretch. You can digest them as you need them, go back to them, that kind of thing. So one thing that I do want to mention before I begin this series, I am a real estate agent in the state of Texas. If you are a buyer in a different state in the United States, then you might have a slightly different process. The process that I'm going to lay out in this series of videos is very, very similar to what you will find in other states. But, in Texas, we use title companies. In other states, they might use lawyers to do certain things. So do check with an agent that you know, like, and trust in terms of the process. But this will give you 95% of how this thing's supposed to work. So if you've never done this before, or it's been decades since you've done it, welcome. Hopefully you'll find this helpful. Please do leave me a comment down below. I would love to hear if this is helpful for you or if your experience is slightly different. But this can absolutely be something that you use as you go and buy your first home or maybe your last home. So anyway, let's get started. So the first thing that you'll want to do, and I say this even as a real estate agent, the very first thing you're going to want to do before you begin your search is to first reach out to a loan officer. It's critically important to do that because you need to know how much it is you can afford and what that payment's going to look like. Usually in the span of a 15-minute phone call, a loan officer can tell you, okay, we can qualify you up to $210,000, and with that you can buy a $225,000 house. And the payment for that is going to be $2,000 a month, okay? Based on prevailing interest rates, based on the amount of money you put down, all those kinds of things. That will give you a much better sense when it becomes time to actually look at homes. If you can afford a $225,000 house, you don't want to start off by looking at $350,000 houses because that's just going to lead to frustration down the line as you're not able to find the home that you think that you should be able to afford. By the same token, if you are looking at $150,000 homes and you can afford a $225,000 home, you're probably going to want to see what that extra amount of money will buy for you in terms of an extra room or a pool or whatever it is, maybe a better neighborhood, all those kinds of things. So absolutely do talk to a loan officer even before you speak to a real estate agent. Super, super important. Now let's talk real quick about the types of loan officers. There are basically mortgage lenders and there are mortgage brokers, okay? They both do effectively the same thing. They get you a loan. Mortgage lenders will lend you their money. So we're talking about banks. We're talking about Wells Fargo. We're talking about Bank of America. We're talking about your local credit agency down the street that you might be a member of. Whatever those types of institutions are, they're lending their money. They have many times tens or hundreds of millions or even billions of dollars to lend out in mortgage loans, but they're going to have a very narrow range of choices in terms of the type of loan to get. There might be some that are fixed rate. There are going to be some that are adjustable rate mortgages. They might have something like a Hometown Heroes for firemen, policemen, teachers, medical workers, those kinds of things. But, basically it's going to be pretty cut and dried. If you fit their criteria, they can get you a loan. If you don't, they can't. Okay. Then there's also mortgage brokers. Now, mortgage brokers have access to many more credit lines than mortgage lenders have. I've heard of some mortgage brokers having as many as 200 credit lines available to you. So if you have a specific, unique situation, you have your money tied up somewhere that you don't really want to get it out of, or maybe you have less than stellar credit, those kinds of things. Sometimes a mortgage broker can get you a loan at more attractive terms than a mortgage lender can, or sometimes can get you a loan where a mortgage lender cannot. So this is not to say that a mortgage broker is better or worse than a mortgage lender. Really, the most important thing is that the person that you're working with is someone that you know, like, and trust, or is referred to you by a real estate agent that you know, like, and trust. Because you want to make sure that they're treating you fairly, that they're not deceiving you and selling you some product that makes them more money, but maybe costs you a little bit more in terms of your monthly payment or in terms of your fees or those kinds of things. So definitely interview, and you can speak with a variety of mortgage lenders. I can tell you that, if you had called 3 different mortgage lenders to all pull your credit, you don't have to worry about that dinging your credit too much, because they're all in the same school, right? If they're all pulling for mortgage debt, it's really only going to count against your credit one time. That's what I've been told anyways. Now, if you were to go and talk to a mortgage lender and then talk to an auto sales, and then go talk to furniture sales, and then go talk to financing for your refrigerator, right? That's going to compile a multitude of hits on your credit rating, and you don't want to do that. But you absolutely can talk to a variety of mortgage people, and if they need to do credit pulls, they can, and it will have a minimal impact on your credit rating. So do be aware of that. Now, once you've found the professional that you want to work with, understand that there are 2 types of letters that they can give you. One is a pre-qualification letter, and one is a pre-approval letter. The pre-qualification letter is very simple. You pick up the phone, you call up your mortgage broker or your mortgage lender, and you have a conversation. And usually after that conversation, they can tell you, okay, if what you have told me about your debts, your assets, your credit report, the money you have to put down, those kinds of things, your credit rating is pretty good, then we can give you a loan of up to $210, and with your amount of money that you have to put down, then we can put down, you can buy a home that's $225,000, right? That's an okay letter. That, to my mind, is the absolute minimum that you need to have. In markets like what was going on in the first half of 2022, where it was just stupid crazy and only cash offers were basically getting accepted, if you didn't have that, I wouldn't even bother making a loan or making an offer. Even now, where the market is more stable and sane, I would tell you that you really need to have a pre-approval letter, really as a prerequisite. It really shows your home seller that you're serious, that you've talked to somebody, that your offer is not just a wish and a prayer, but that you've actually spoken to somebody. Now, the other type of letter that you can get, as mentioned, is a pre-approval letter. And the pre-approval letter is a more extensive process. They absolutely will pull your credit. They absolutely will verify your income. They absolutely will make sure that you have your job and all that kind of stuff. But then at the end of that, and it takes usually a couple of weeks, maybe 3 weeks. But then at the end of that process, they will tell you, you have been pre-approved. If you have been pre-approved for $225,000, if you write a contract for $225,000, that's really all we need, and then we can take this thing to closing. If you do get a pre-approval letter, that is a promise that is good as gold. Your lender has told you that you have the money, and it's basically done. And if you get a pre-approval letter, you should emphasize to your seller that you are pre-approved, not pre-qualified, and what that means. And you also need to emphasize that to your realtor so that the realtor can also work on your behalf and emphasize that as well to whoever you're bringing the offer to. So very, very important. Both are good. Pre-approval is better. Pre-qualification is certainly fine. Now, the last thing I want to talk about that many people don't know is, you don't have to have $50,000, $100,000 in the bank to buy a house. There are loan programs out there. Many times people sit here and think, oh, I need to have 20% to put down on a $200,000. I don't have $40,000. Gosh, I guess I can't buy a home. It's absolutely not the case. You can put down 20%. There are conventional programs out there where you can put down 10%. You can put down 5%. There are even some programs out there, many programs in fact, and in fact, most first-time home buyers use this program where you can put down as little as 3.5%. So on a $225,000 home, that's what, maybe $8,000 down. Now you will need to have another $7,000 to $10,000 in closing costs, depending on your state, all that kind of stuff, time of year, all those. So you probably do need to have $15,000 to $17,000 in the bank, ready cash, ready to go in order to buy a home. But if you've got that much money in the bank and you've got a decent credit score, you can buy a house. So I just want to make sure that you know that if you're thinking about buying a home, you can put down as little as 3.5%. And of course, you need to have some pretty good credit, but from there, it's the world is your oyster, and whatever you can find at the price point that you can afford, then you can get. I will tell you again, talk to your loan officer. They will tell you what it is that you can afford. Do ask them what that payment's going to look like, and then you can sit down and say, okay, you know, it's going to cost me $2,100 a month for my mortgage payment, but hey, my rent is $1,900. I can absolutely afford $200 more a month to own my own home that I'm not having to maybe move out in 6 months or a year and the rent's been jacked up on me. So hopefully this has been a helpful start. There will be more videos that go along with this series, and I would love to hear your feedback. Other than that, have a great day.